their shares, and Lavrov put a couple of short futures in the market just to boot, and then decided, let's make a little news announcement. By the way, guys, we're going to not give up on just the Donetsk region in Ukraine. We're going to try and press a little bit further. We're going to change our objectives to make it a little bit bigger and grab a little bit more agricultural for ourselves. And obviously equities didn't like the sound of that. And obviously equities took a little bit of a tumble from 48s to 28s. Now, the yield narrative never changed. So what happened was, we've been talking a lot about dollars this morning. And because it went from 48s to 28s, we were able to then look at that and say, right, let's start buying some equities in here. We gave a shout out in the room. Oh yes, we did. We gave a shout out in the room as well. We started to say to everybody, look guys, there's a chance here for a little opportunity. No, you never. Yes, we did. That's the point. Yes, we did. Look at the tweets. There it is there, look, equities, ES, bidwatch, 1246, bottom edge, bidwatch, 1246. So we can obviously understand that we're already on that bidwatch narrative. We're already playing into this. There was a little spring trade following the tweet. And obviously we had already seen a capper coming in. We'd already bought it from this angle here already. We knew about that, guys. We'd already talked about it in the classroom. In fact, we did quite a few classrooms again this morning, which you guys would have been aware of. So you can see that everything is nice and balancing. Now Lavrov just came out again and talking about Ukraine, saying that peace talks don't make any sense. They obviously don't like the fact that equities have just caught a bid, maybe still holding on to some shorts there. So he thought he'd maybe just add a little bit of extra weight for his short position. But obviously that's already been priced in, so I don't think it's going to have a huge difference. But nonetheless, it has stopped the rally, and the price has just stalled there at 35 halves. And we'll see if Lavrov's comment does drive the price down a little bit, suggesting that Lavrov is still short the market and wants a little bit more from his money. He's maybe thought he could have got a lot more than $1,000 in that sell-off. Come on, Lavrov, what do you think this is? The market's already pretty rotten, so you know you've already sold off the markets. You've already got your money. Stop being so greedy and making some sound bites here just to make yourself an extra couple of ticks here. Come on. But yes, he has stalled the market again, 35 halves. It has dropped back off a little bit. And we'll see how the afternoon develops. But we've actually been chatting a lot about this. And I've tried to get people to recognize the key driver in this whole storyline has been the dollar itself. And we've talked about this many times in the last few weeks. Predicting the dollar gives us a good quality of narrative. In fact, we've went through a narrative there on the S&P that showed exactly where the buyers were going to come in, exactly where the longs were going to be, exactly where the trades were going to take place, and they happened to be in exactly those places. When you start using this stuff, and that was a question I was really asking this morning, was are you now using this stuff? Because if you're just still nodding like the noddy dog in the back of a car and it's just nodding away in the background, it's not actually agreeing with anything, it's just because you're going over a bump, right? Well, that's the way a lot of people are in the classroom. They'll nod along and say, yeah, that's a great idea. Then tomorrow they've not used any of it and they forget about it and it's gone. So the question was, I know you accept and you agree with this, but are you actually using the stuff we taught yesterday? Are you now applying that stuff? Because otherwise it's going to be gone. You're going to lose the opportunity. And that's exactly what we're seeing a lot of the times from a lot of people, is that they simply don't apply the stuff we teach. And then the next day they've forgotten about what it is we've just taught. Because they've forgotten about it, they're going to have to wait for the next time we teach it. And when I say, does anybody using this? They say, it's a great idea, I'm going to start using it. And it's like, but we taught this weeks ago, why didn't you use it then? Could have made a lot of money. Could have made a lot of money then. Why is it getting pushed off to get starting to use it? You've got to start using stuff immediately. That's why when we do exercises in classroom, we hope people do the exercise along with us. When we put a line on the charts, you put your line on the charts, you copy that line in the charts, you then use the line that day, you check it and you go through the process, you like it, you don't like it, you chuck it in the bin, or it becomes another area that you start referring to. That's how we train, that's how we teach. So welcome in, guys. I hope you're good, ready to go. We've had some interesting trades. We've had some quite a good day on oil, actually. We just called a buy trade at 99 evens that we took up to 99.50s. Made ourselves $500 and very, very nice indeed. Thank you very much. Very nice. A few of the guys were on board that trade, so that was always good. We've talked about the pivots. We've talked about a few other elements from the pivots as well. We've talked about some other ideas that you could have been paying attention to. Cap trades turning into buyers pending and vice versa. So yeah, it's been a good morning. Let's get through the numbers so that we catch up. Not an awful lot of numbers, but what the numbers we have seen. The German PPI numbers did come in softer at 0.6. Always welcome to see any type of inflation index coming in a little bit weaker than had been forecast, 0.6 against a 1.6. However, it was offset very, very shortly afterwards by the UK CPI year-on-year number coming in at 9.4 against a 9.3 forecast, 9.1 prior, so a pretty hot UK CPI number at 7 o'clock this morning. And obviously when you look at that hot number at 7, you start to recognise, well, why the hell did bond prices go up at that stage? Yeah. There was other drivers, of course, which we'll obviously touch on because we were obviously in that trade ourselves. PPI input numbers also were beat expectations, and so did PPI output numbers. RPI also came in line with prior, but it is still higher than the previous of 11.7. The Eurozone current account was expected to show a surplus of 4.5, showed a deficit of 4.5, and the UK house pricing index came in at 12.8. against the forecast of 11.9. So pretty hot UK numbers, and obviously that's not particularly helped the overall storyline, but the overall storyline being changed by the Lavrov intervention, and obviously that's something we've just had to acknowledge and deal with as it happened. It's not something we can plan for, and we obviously just have to, as I said, acknowledge it, deal with it, factor it into our thoughts, allow it to do whatever it needs to do, and then make a play for the trade, and then make a decision. Most of our equity trades have actually been based this morning on the dollar movements itself, and with the dollar movements, of course, we can obviously try and get ahead of the dollar, which is what we did this morning in terms of equity trade. And as soon as we saw the dollar movements coming into play, we were already long equities anyway, so we've been able to take full advantage of being able to predict the dollar. And it comes back to that conversation we had yesterday about what retail traders trade and what we trade in this room. Retail traders trade with this 100% certainty. You might be saying, wow, well, I want to trade with 100% certainty. Yeah, 100% certainty because they're looking in the background. So everything appears like it's 100% certain. If you look in the background of your charts, you'll be able to pinpoint the turning points of your market, aren't you? You're able to pinpoint exactly the turning points of the marketplace. So if retail's in the 100% certainty because they're using lagging indicators in this area here, because they're using these lagging indicators in this area here, then of course everything's 100% certain. It gives everybody a kind of warm, comforting glow about their trading that, my goodness, I'm in an oversold stochastic, I'm going to be buying the market, so there I'm going to buy it, and my God, I'm losing a lot of money. What happened? So obviously that's retail traders. They've got a lagging indicator there, but they're using 100% certainty according to what they're seeing, and it's giving them a false sense of security. And then we see the T equals 0 traders, and obviously what these guys are is basically the floor traders. T equals 0 is the floor. They're dealing in real-time order flow. So that's T equals 0. And what are the probabilities? What is this guy here? Well, this is the quants. This is the world of futurists, if you like. And I don't like that word because it starts throwing up some ideas of David Icke in the background, you know what I mean? So, but the idea of probability moves beyond the T equals 0, doesn't it? It moves into the T advanced by 1/100th of a second. It moves at T advanced by 1 week, or advanced by 1 hour, or advanced by 1 candle. And obviously there's never a certainty, but a probability. In most of your situations, it's a probability. So when we move literally one microsecond into the future, that's what the quants were doing in the early days of in the early days of what? In the early days of algorithms. They were trying to get in ahead. So when the floor was trading at 0, they were trying to trade that microsecond ahead of the floor. They were trying to trade a microsecond ahead of their competition, and that actually put them in the future, and they made millions, hundreds of millions of dollars by getting that extra microsecond in front. Well, what we teach in this classroom is to trade on that right-hand edge of the t=0 line. We try and get you in front of the market, which means that you're trading a probability distribution, and it's about getting that probability correct. Make sense? Makes a lot of sense. So welcome in, guys. I hope you're all good. This afternoon we do have some data to come out that we have to deal with. We do have some data to deal with this afternoon, 1:30. We've got Canadian CPI numbers expected to come in a little bit softer at 0.9%. However, the common number is expected to rise, the median number is expected to rise, and the trimmed number is expecting to rise, although the headline is expected to fall. So just bear that in mind. There is a mixed response. Moving into the rest of the other numbers, we've got IPPI and RMPI, two other inflation gauges, also coming out of Canada, both mixed. This afternoon, we do have existing home sales coming out the US at 5.37, down from the 5.41. And also this afternoon, we do have the usual time slot for crude oil today. Obviously, last week we had that little bit of a problem, and obviously from that problem, we were able to take advantage of a pretty good trade actually last week. But anyway, crude oil inventories 3:30 today, and that finishes off today's data. There's no speakers of note in the markets, so we just recognise that. Quite a limited amount of US data this afternoon to work with. The existing home sales doesn't come out until 3 o'clock, so the US cash open will be the next major event, guys. The US cash market open for bonds, the NYMEX open for oil, and the US equities open at 2:30 for the equity markets. So I'm going to grab a little bit of lunch. I will be back in 10 minutes.